Here. There. Oh, that's right. Cam, what's going on? All right, let's see how that works. I think that's it. All right. Getting the ball rolling. Almost there. Almost there. I think that's it. Live. All right. That being said, let's get the ball rolling. All right. Let's do this. All right. I think we are ready to roll. Good evening, everyone. My name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for a weekly cash flow of 1% per week. That does come over to 50% by the end of the year. Let's see who we have tonight. Tonight we have, all right, Ben's here. Ben Speed's here. Liquid City Groups is here. Who do we have over here? Over here we have Lloyd, Cam, Bella, Ben, Woodman, Rudy, Andre, Marcus, Enza's in the house. How you doing, Enza? Cam's here. Freddie, Combat Medic. Okay. Matthew, Roxanne. Thank you there, Roxanne. Rez, what's happening, Rez? Mike Rich, forever. Whew, crazy. Lodge, do you have a typical stock price on certain tickers that sway you into weekly options? Whoa! That was a good one. All right, Lodge, let me tell you, no. Basically, what I'm looking for, Lodge, specifically, I'm looking to jump in on a Monday, get out on a Friday or next week. I don't want to hold anything more than 1 or 2 weeks. That's it. I want to get in, get a small percentage, and get out. That's it. Okay? Inca, Matthew, Bill, the Brown, Mamba, woohoo, Lizard. What did I walk into, James? Oh my goodness, what you walked into is an opportunity for you to take the investments in your own hands and make at least 50% by the end of the year. Simply, safely, predictably, and consistently. That's what you walked into. Mohammed, how you doing? Lizard. Is this effervescence or AI? Neither one. Terribly sorry, dude. Here, Balak? Okay, Balak. Okay. You can imagine AI is unsetting. Nope. Blizzard, can we look at Pfizer tonight? Absolutely. I love Pfizer. I do. Zatag, what's going on? Roxanne, howdy. Thank you there, Blizzard, Lizard Lodge. Running the wheel strategy? No. Or do you aim to maintain your shares, covered calls plus puts? Sometimes. Lizard, an opportunity. I like it. Ops, wonderful. Phil, how you doing there, Mr. Phil? Let's go back to where we were right here. Lizard wants to take a look at Pfizer. I like Pfizer. We'll take a look at that in a second. Let me finish saying hi to everybody, and we'll get right on that. That'll be the first one tonight. All right. Over here, we have Susky Utilico back again, dude. Cool bean. Got the script? Yes, I do. Bob, did you know? Okay, did you? That's an interesting name. Shell, Gusto, Duane, Constantine, DJ Flawless, back again. Nice going, brother. Nice to see you back. Matthew, Nilo, I am the cool mom. I love cool moms. Logos the God. Okay. Ann Lyons, Andrew, Carl, J. Vid, Carolina, good evening. Calabri, Sachi, Jacob, 1MCB Golf. I have no idea what that means. Dine Shub Restaurants. Okay. Oscar, how you doing? Nee Harnell. Okay. Tashfeen, watching from San Diego. Dude, I was there last week. Paul Rod. Hey, Paulie, what's going on? All right, where else? Wait. Okay, here. Oscar's house in the house. Jose, que pasa? Alex is in the house. Here's Alex. Mindy, how's it going tonight? Miss Mindy, it is going absolutely lovely as usual. I went down to hang out. My grandson broke his arm yesterday. So I told my son, I said, hey, how about we get me, you, grandma, and grandson? The 4 generations will come on down. We'll get some pictures taken, and he'll always have a story to tell. He broke his arm, and he hung out with grandma and great-grandma. That ought to be a good thing. Hopefully. I don't have memories of my grandmother, my great-grandmother, but at least my grandson will. That's a good thing. But that being said, let's jump in, see where we are, see where we're going, see what's going on, all that kind of nice, neat fun. Wrangler, what's going on? All right, first one on the list tonight is going to be Pfizer. I got a request. I love tornadoes. Caden and Oso. Now, I don't know either of you guys, so I'm going to say no only because if I don't know you, I'm not going to invite you on the show. Because I don't want to talk about tornadoes. I don't want to talk about Amway. I don't want to talk about religion. I don't want to talk politics. I want to talk about dividend stocks and investing for a safe, predictable return. All right, hold up. This getting old stuff is for the birds, I tell you that much. All right, first one on the list tonight is going to be Pfizer. PFE brought to, let's click on it. PFE and brought to you by, who is it? Lizard. Lizard wants to take a look at Pfizer, and Pfizer has their EX dividend date on Friday. So why are we looking at it today? Usually when a company has a dividend date, I want to look at it 2 weeks before the dividend. 2 weeks. Anyway, here we go. The high, the low. Where was it? Where is it? Look at this. Up, down. Simple. Up, down. That's it. It's pulling back at the moment. So why do we want to look at it? All right, let's get a closer look. You ready? Here's our last 30 days. The last 30 days gives us a good idea of where it's going next. That's what I want to know. Where is it going next? Okay, here's the high. Here's the low. Here's where it was. Here's where. Look at this. Down, up, down, up, down, up. Bottom was yesterday. Today is higher. Okay, dropping, bottom. Yesterday. You cannot get any lower than the low. And that was yesterday. And today, we're going up. Now, is it going to continue going up? Well, the dividend's on Friday. Well, the EX dividend's on Friday. Wait a minute, I didn't say hi to you guys down here. Sorry about that. Liquid City, how you doing? Cool. All right. So I don't want to look at this week because we only have 2 days left, Thursday and Friday. We're not going to get a good return for this week. So let's jump on to next week. And next week, we're currently at 26.53. So this does have a 26.50. Now, am I reading that right? Oh, I'm going to say no to this one. Sorry. No to Pfizer. Now, don't get me wrong, Pfizer is going up if you like it, but I don't want to buy something if it's not going to pay me good enough. Now, I'm looking for 1% every week. The current price is $26.53. So if I buy it at $26.53, right, I'm going to sell the 26.50s. KJ, nice Zoom crowd, cool beans. Okay, if I buy it at $26.53, I'm going to sell it at $26.50. But look what the market maker's offering, 22 cents. That's less than 1%. So as much as I like Pfizer, and I do, it's going to be a no for this week. Next week might be a different story, but this week it's going to be a no. What do we have over here? Carmen, how you doing, Carmen? Thank you, Carmen. Penny, hello, Stockman. Interesting. Doesn't the graph go left to right? Now, Penny, you're on YouTube. Now, I have 3 YouTube channels, and only one of them allows me to do it the right way because I'm broadcasting off of an iPhone. The selfie camera on an iPhone doesn't allow you to invert the screen when you couple it with YouTube. So TikTok does, and the other YouTube channel does. By the way, for those who don't know, the screen behind me, this is live on YouTube. So you can see this without me being there. I think I'm in this little tiny corner right here. Okay, but it's live on YouTube. Because if you're on your phone or a laptop, you probably can't see these little tiny numbers. And later, you can go back and watch it live. Not live, recorded, because it's being recorded now. Wait a second. As of this moment in time, it is 9:24 p.m. on the 6th day of May, just in case, right? Logo, no, not running wheel strategy, only half of it. All right, Lizard, you're welcome. Christian, they haven't been moving much, mostly in the wrong direction. All right, I think I missed something there because I didn't see the whole question you have. All right, thank you. Can we look at Pfizer? Yep. Howdy, howdy. Thank you. Okay. No. All right. I don't appreciate it. Phil, how you doing? Let's look. What else we got? Micus, how you doing? Lizard Lodge, his goal is to having the shares called away and the stock going up, but if not, just at least. Okay, thank you. Beloved, how you doing? Darcy, how's it going? 1 to 2% a week in selling covered call premium. Absolutely. Christian, they haven't been moving much, mostly in the wrong direction. Well, then you're looking at the wrong stocks at the wrong time. There's 11,040 different companies. If what you're looking at is not moving, well, you're not looking at the right ones at the right time. Certain stocks do certain things on a consistent, repeatable basis. Okay, Zotag. Zotag wants to take a look at when. Okay, Lizard, WM, which is Waste Management, is a monthly option. So I don't do monthly, so let me just show you really quickly. WM, Waste Management, it's a great company, but May, June, July, September, October, December, January, those are months of the year. Now, if I'm getting 1 to 2% every single trade, doing it 12 times a year gives me 12 to 24%. No. Why would I do 12 to 24% when I can get 50% to 100%? It's strictly a numbers game. It's got nothing to do with the company. It's a great company, don't get me wrong, but I can only trade it once a month. Why would I do that? Once a month doesn't work for me. All right, what else do we got? Draconta, interesting name. Okay, Zotag wants to take a look at when, W-E-N. When do you want to take a look at when? Here we go. Well, now this is interesting. Look at this. The high, some low. Where was it? Where is it? What's the direction? Down. That's it. What's going on right here? Now, if this is a good company, which I really don't know, what is it? Wendy's. Okay. The last 30 days, here we go. the high, the low. Where was it? Where is it? Look at this. Up, down, up, down. Now she's going back up again. If you like Wendy's, and that's always the catch. Do you like the company? Well, the bottom of the year was yesterday. Today is 1 day off the bottom. Now, I have perfectly like 2 days, but we got one. All right, so 665. The 650 is going for 30. That's going to be a no because I lose 70 cents. Wait a minute, no. On the 650, I lose 32. Take 32 off this. I'm negative numbers here. No. Well, the 7 might work if you really like Wendy's. Let's take a look at it. Change it to a covered call. Let's see what it looks like. The 7s, there it is right there. One contract. See, when I take a look at just one contract, it gives you an idea of what your profit could look like and how to do it. So, by one covered call of Wendy's, 15 May 26th, that's next Friday. The $7 call option, well, the stock is at $6.72. The $7 call option is paying $50 per contract. $650 is the cost of the trade, including commissions and fees. Think of it like a vending machine or a weekly cash producing asset. Ben Speed, what's happening, Ben Speed? How you doing today? And Becky, how you doing, Becky? All right, so I'm going to need the calculator to figure out what the rate of return is here. To find the rate of return, you take the profit, right here, max profit, $50, and we're going to divide it by the investment. And the investment, again, is $650. The cost of the trade, including commissions and fees. Now, the interesting thing about this, kind of like any asset that you buy, it is mine to do it as I please until I decide to let it go. I can sell it, I can let someone buy it from me, but it is ultimately my decision. Okay, so we're going to take that, divide it by that to give me the rate of return for 1 week. 650. Holy shnikey, 7.69. 7.69. Now, that's buying it at the current price, which is $6.72. And if I sell it at 7, I get the difference between $6.72 and 7, which is another 28 cents. And I pick up this. 28 cents is $28 per contract. So I'm walking away with $78 per contract. $650. Think about it. Now, when I say I buy this at this price, I will never sell it for less than what I pay for it. Because I got 5 simple rules. Now, for those of you that are new here, the strategy that I'm giving to you was created for my 9-year-old daughter. Back in 2008, hold on, while I'm doing that, let's save this one. In 2008, she said to me, Daddy, can you teach me? At 9 years old, she wanted to learn how to invest in stocks. I said, okay. So for my 9-year-old, it had to be simple, safe, predictable, consistent, and no way for her to lose. So here we go, Wendy's. That's so you can see it. One covered call, Wendy's, 15 May 26, which is next Friday. Means the option expires next Friday. The $7 call option. Now, remember when I said simple, safe, predictable? Now, when I said predictable, I know what my profit's going to be. I know what my investment's going to be. And here's the thing about covered calls. When I buy the stock, I don't have to wait for the profit. My profit is right here. I get that the very same day I buy it. Now, I get my profit and I still own the stock. Because if they don't take it away from me this week, then I can write another covered call next week. If they don't take it away next week, I can write another covered call and another covered call. So, simple. There's 2 strategies that are easy. Buying and selling. Well, when you buy a stock, you have to wait for it to go up. or down, and then you sell or you keep from losing, one or the other. But with a covered call, you buy the stock, you sell the option, and it is the premium, this right here, that I'm looking to collect. Now, on this particular trade, it just so happens to be 7.6% for 1 week. If and only if I actually like the company. That's it. Wrangler, Wendy's is at a low. You'd still grab that? The 1 year chart looks horrible. Yeah, I heard what you're saying, but hold up. I'll take another look at it for you and I'll show you what I like and what I dislike about it. Okay, so sit tight for a minute. So, simple, safe. Now, the covered call is so safe that the federal government allows you to do a covered call in your IRA. So if you have an IRA and it's not, and you're not self-directing, it means you're not investing it yourself. All right. All right, so simple, safe, predictable. I already know what my profit's going to be before I even do it. Now, I have no intention on buying it and holding it for the rest of my life, but that is rule one. Never buy something unless you intend on holding it for a long period of time. So, yeah, I like this stock. I'll hold on to it if I like it. And that's the big question. Do I like it? Now, somebody talked to me about the chart. We're going to go back and look at that again. This one is 7.6. Okay. For Tuesday. Tuesday. $7.6. Lovely. Tuesday, 7.6. All right. What do we have next? All right, let's get out of this.
I'm sorry, James. What stock was that?
That was Wendy's.
Gotcha. Thank you.
All right, nice Zoom crowd in the house tonight. Hello, everybody. All right. So that was Wendy's. If you like it, great. If not, then just don't do it. It's actually that simple. Okay. 5 criteria. Remember I said my 9-year-old wanted to do this? So at 9 years old, it had to be simple, safe, predictable, consistent, no way for her to lose. That's it. Simple, safe, predictable, consistent, and no way for her to lose. Now, 5 rules. Are you ready? Rule number 1, never buy anything you do not understand or you do not want to hold on to. If you don't understand it, if you don't want to hold on to it for the rest of your life, don't buy it. Rule number 2, never sell at a loss. It defeats the purpose of the game. And yes, this is a game. Just like Monopoly. 4 green houses, 1 red hotel, round, round, round you go. Okay? So now, this is the game. Once you understand the rules, okay, it's really simple. Simple, safe, predictable. We already know what the profit's going to be before we even do it. Simple, safe, predictable, consistent. Well, that's why I want a weekly option. Because a weekly option, I can do it every week. Every 7 days, I can bring in money from my positions. And then rule number 5 is make sure all the numbers work. Now, we're going to do some samples, and we're going to take questions, and we're going to find out everything. We're looking for 5 good companies tonight. We got one right now. So, Wrangler. Wrangler says Wendy's looks terrible. He's absolutely right. I mean, look at it. This is the 1-year chart. The high of the year, 1250. Now we're at 650. That is a 50% decrease in the whole year. But at what point does it stop going down and turn around and go back up? Well, it's possible that it was yesterday. So let's zoom in again and take a closer look. Okay? Drop, drop, drop. Yesterday was the bottom of the year. Today is 1 day up. Now, normally I don't jump into anything except for 2 days up, and on the third day I will jump in. So I want 3 days going up, and then on the third day I will jump in. So I wouldn't do this one yet either. I would wait until Friday to see what tomorrow's numbers look like, and then if Friday's a third day up, then I may do it. Other than that, I don't. All right. What do we have next? Hey, Austin's in the house. How's it going, Austin? Okay. Lizard, yep. Christian, they haven't been moving much, mostly in the wrong direction. Yep, I hear you. Waste management, we looked at that one. Wendy's, we looked at. Okay, Lizard wants to take a look at USO. USO. United States Oil. No, not this week, brother. Sorry. Take a look. The high, the low, where was it? Where is it? Sideways, up, down. Not this week. Sorry. Simple, right? Not this week. Lizard, but Waste Management's current monthly option only has a week left. No. I don't do monthly options. They're available once a month, which means at 1 or 2% every trade, that means I'm getting 12 to 24% by the end of the year. This meaning your strategy. Yeah, it's a strategy I created for my 9-year-old. I'm giving it to you for free. Simple, safe, predictable, consistent, no way to lose. If you do it right. Easy, right? All right, Austin, went too far. All right. How do you have 650? Schwab says it is 15. You're talking about Wendy's, right? WEN. Okay. WEN. Who said this one? Lizard, are you ready? Right, 665, 650. The 650 option is right there. All right, let's see if I can do it this way. You ready? Watch this. You'll like this. This is the beauty of this little screen I like. You ready? Who said this? Lizard, you ready? Where is it? Come on, come on. All right. Here we go, Lizard. You ready? Here we go, here we go, here we go. All right. The current price, Lizard, $665. Okay, the 650 right there is going for 30 cents a share. Okay, the $7 call option is going for 10 cents a share. So depending on what you want to do, and you said 15 cents, I'm showing 30 cents. And then for the 7, I'm showing 10 cents. And this is Charles Schwab. That's got nothing to do with me. It's Charles Schwab's number. Okay, think or swim. As a matter of fact, let's go take a look. Let's go take a look at Yahoo Finance and see what Yahoo Finance says. WEN. Okay. Wendy's, 665. Let's take a look at options right there. Take a look at the options for Wendy's. All right, not that I don't believe you or anything, but here we go. I don't want 5.8. I want, hold on, I gotta find the right one. Here we go. 15, there it is right there. Last price bid ask. You're right, it does. It does say 15. All right, so Here, all right, let's do this again. You ready? Give me 1 second and blow it up, make it look nice and big for you. Here it is. This is from Yahoo Finance. All right. Okay. The 650 is going for 30 cents. The 7 is going for 10 cents. Same numbers. This is Yahoo Finance. The other one we were looking at was Charles Schwab. 158 contracts. Okay. So the numbers are right. 10 cents a share for the 7s. Okay, Ivan, higher the implied volatility, the higher the premium you collect. Okay, it's not a question, Ivan. That's a statement, but thank you. Ivan wants to take a look at Microsoft. Microsoft, here we go. MSFT. Yeah, anytime I look at anything, it's always the same thing over and over again. Caucasian redneck. What's happening there, redneck? So, anytime I look at the chart, I'm always looking at the exact same thing. The high, the low, where was it? Where is it? Okay, up, down, right there. What's going on? Is it going up? Is it going down? Well, last 30 days, what do you think? High, low, where was it? Where is it? Up, down, up, down. Okay, not where I want to be. She went up, she came down, now she's up, now she's come back down again. So I like Microsoft, I do, but not at the moment. Ricky likes Coca-Cola. Coca-Cola, same thing, Ricky. The top, the bottom, where was it? Where is it? Okay, sideways, down, up, down, up. What's going on right there? Let's zoom on in. If you like Coca-Cola, of course. Last 30 days. Up, down, up, down, up. So you get the bottom here, 1 day, 2 days. So if tomorrow's up above 79.23, I would jump in. That's me. DC, New York City, what's going on? All right, so that being said, let's jump in and take a look at Coca-Cola. Wait a second, before I do Coca-Cola, the current price, $79.23. The 79s are going for $1, not quite 1%. And the 80s going for 55, not quite 1%. So Ricky, do you see that? If I'm buying it $79.23 and I sell it at 79, I'm collecting $1. But I'm losing 23 cents right off the bat. So I got to take the 23 cents off of this dollar, and that puts me at 77. That's close enough to 1%. Let's take a look. Yes, if you got the waste management call on Monday, it will be a week till expiration. Lizard, I understand what you're saying, and I agree with you 100%. But what you're missing is stocks go up, stocks go down. If I buy waste management and it doesn't get taken away from me this week, the next option is 4 or 5 weeks away. And I don't do monthly because I have to sit on it for 4 weeks and bring in 1 or 2%. No, that doesn't work for me. All right, so Coca-Cola at 79. One contract. Here we go. You ready? One Coca-Cola by one covered call KO. 15 May, that's next Friday. The 79 call option. 82 is my profit. 7,800 is the investment. Let's take a look at the rate of return. So the profit, 82 bucks. The investment, 7,818. What does that allow me to walk away with? 1%. That's it, just 1%. So I like Coca-Cola. They've been around for 140 years. They got 5 decades of consistently increasing their profits year after year after year. That just makes sense to me. Here we go, Coca-Cola. Stock number 2. Here we go, right? There we go. By one covered call, KO, Coca-Cola. 15 May 26. That means the option expires next Friday. Now, if you understand a covered call, I mean, I buy the stock first, I sell somebody the rights to buy it from me at the same price I just paid for it, and I walk away with 1%. And if I do it every single week, that's 50% by the end of the year. Okay. The 79 call option, 82 is the profit, 7,800 is the investment for a 1% return for the week. One. Next. Let's get rid of this. Get rid of that. Get rid of this. Back to that. Let's go back to here. And what do we have next? Next. Whew. Was that Wendy's trade the 650 or the 7 call option? It was the 7 call option. Because the 650, once you start subtracting all the loss you're going to take, you're not walking away with much. But the 7s is going to give you a good rate of return. And if it goes above 7, if you like it. Remember, there's only 1 day up from the bottom. And I normally don't buy 1 day up. I wait for 2 days. And on the 3rd day, if it's 3 days up, then I will jump in. Only then. Options lever. Do you prefer cash secured puts or covered call strategy to run full time? I have better luck with covered calls as opposed to the cash secured puts. But either one is doing the exact same thing. Now, when I say it's doing the exact same thing, let me explain. Because when you buy a stock, you're taking a chunk of money and you're putting it aside to buy the stock. And then you sell the option. Well, a cash secured put, you're doing the exact same thing. You're taking a big chunk of money, putting it aside, selling a put. So if the stock goes the wrong direction, you have to take that money and you have to buy the stock. Or you push it forward, one or the other. Okay? Phil, what's happening there, Mr. Phil? Schwab takes the premium and the stock appreciation to figure out the profit on the trade. Absolutely. Ooh, I have no idea. I'm going to call her Sunshine, or him Sunshine. Merck, M-R-K. Didn't we look at Merck last night? I mean, like, what's the difference between last night and tonight? M-R-K. All right, here we go. Merck. I'm looking at the exact same things. Are you ready? The high, the low. Where was it? Where is it? What's the direction? Sideways, up, down, up. That looks nice. Well, before we go any further, 113.56. The 114s, you're going for 170. And look at that move right there. That looks pretty good. Last 30 days. Now, the last 30 days gives me a good idea of what you guys are doing. Buyers and sellers. Okay, we are buyers and sellers. We buy, we sell. When the stock goes up, great, wonderful. All right, so 30-day high, 30-day bottom, up, down. Now she's going up. You can't mistake that for anything else. Here's the top. Here's the bottom. She dropped. Now she's going back up again. The top is right here. The bottom is right here, and we're going up. How far up? Don't know, don't care. because I'm not looking for stock appreciation. I'm looking for this little number right here. That one or this one, either one. Now the 113 is a safer trade. Wait a second, I didn't see that. Did you see that? I didn't see it. Okay, check, look. The current price, 114. Oh, 110 to 114. Yeah, you can't count that. That one, here we go, 221. Let's see what the 113 looks like. You ready? Merck, covered call, 113. One contract. Here we go. You ready? Buy one covered call, Merck, MRK. 15 May 26. That means this option expires next Friday. 113 call option is paying 174 profit. Cost of the trade, including commissions and fees, 11,126. So the rate of return. Now I do this for every single trade that I do because I'm looking for 1% every single week. It takes me 5 to 10 minutes. That's it. 174 is the profit. Okay, 11,126. What does that come to? 1.5. Now I can do 1.5 all day long, and it's Merck. I like Merck. So let's take a look at Merck. Here we go, Merck. One covered call, MRK, that's Merck. 15 May, that's next Friday. The 113 call option, well, the profit, 174, the investment, 11,000, and that gives me 1.5% for 1 week. Now, if 1% every week is 50% by the end of the year, what's 1.5? Hell of a lot more. That's 3. We got 2 more to come up with. Wow, we're doing pretty good today. 1.5. We got 2 more. 2 more. Thank you, Phil. Thank you. What do we have? All right. Ricky wants to take a look at Oracle. Spend a buck. Good evening. Cotton Express, back again. Do you ever look at the MACD for the green shoot? Never. Now, Cotton Express, you've been here before. You've seen me do this over and over again. I don't use the MACD. I don't use Fibonacci. I don't use the Greeks. I look for simple as can be. The stock is going up or it's going down. I only want to be in it for 5 days. Can it continue for 5 days? That's it. All right, Ricky, Oracle. Let's get out of this. Get out of that. Get out of this. Go back to here and put in Oracle, ORCL. ORCL. Huh. Give me 1 second. I'll be right back. Oh, you know what I'm going to do while I need my 1 second? I'm going to show you the princess. Okay. Videos. Oldest. Now, remember when I say this was created for my 9-year-old daughter? Remember, my 9-year-old daughter said, Daddy, can you teach me? Give me 1 second while she entertains me.
Number 1 is
The list is going to say you will help you get the best return on your life. Wait, if there are 20 exactly, there's 20 exactly trading days, and if you only have it on the stock for about 3 days, how long is it? 4 guys. Oh, God.
All right, it's a little better.
I could do it.
Hold up.
Because I'm just sending you a list of stuff that I'm trading.
There's me, 18 years ago. Here comes my favorite part. You ready? Here it comes. Yeah. All right. So anyway. No, the only reason I show you that is for a 9-year-old, it had to be simple, safe, predictable, all that stuff. And I had to be able to do it in less than 10 minutes. That being said, it was created for a 9-year-old. Simple, safe, predictable, consistent, and no way to lose. MACD is pretty simple. Green, good, red, bad. Yeah, Cotton Express, I understand that. You know, Y rank, how you doing? I understand the MACD is simple. But you got to remember, teaching a 9-year-old is not the easiest thing in the world. And why would I choose MACD? Why not the RSI, Relative Strength Index? Why not the Fibonacci retracement numbers? Why not the Delta? Why not the Vega? Why not the Theta? Why not anything else? Simple, safe, predictable, consistent. I'm 73, not 9. I get it. 73, great. Use the MACD. Use the RSI index. Use the Fibonacci retracement. I'm giving the same talk that I gave for the last 15 years. It's the exact same. I'm not adding anything new. I'm not taking away anything. Okay? Now, there's a lot of things you can do to make sure your trading is safer. Well, right now, the simplicity of it makes it as good as it is. It's adults that want to make it more complicated. No, don't get me wrong, the MACD does have its place. So doesn't the Fibonacci. So doesn't the RSI. So, thank you, Bill Evelyn. I appreciate it. I do. You know, you're here. You give input every once in a while. Great. I appreciate it. I do. Thank you. But you're right. The MACD, you can add. There's a lot of stuff you can add to make you feel better about what you're doing. But you have to ask yourself the question, does it make sense or doesn't it? Okay, I look at the simplicity of it. Okay, a 30-day high, stock drops, finds the bottom, turns around, goes back up. The MACD, RSI, Fibonacci, anything you can think of is not going to make that any different. Facts are facts. Here's the top, here's the bottom, here's where it was, here's where it is. It went down, it went up. It went down, it went up, it went down, it went up, it went down, it went up. That's what it did. This is where it is right now. Now, by looking at it, it looks like it's going up. You either like the company or you don't like. Exactly. Trend is the trend. Absolutely. The trend is the trend. Downtrend. Now it's changed. Now it's going back up again. Can it stay like that for 5 days? That's my question. Okay. Do I like the company? I asked myself a couple of questions. Number one, does it make sense? Well, it makes sense for me. I'm the one who designed it. Number two, do I like this company? Well, I like Oracle. I actually have some Oracle. Wait a minute, that's Oracle, that's Merck. Okay? I like both of them. Now, to put money in for 5 days, can it continue going up for 5 days? It's a yes, no question. But if it doesn't, am I okay with holding on to it? Okay, rule number one, never buy something you're not willing to hold on to long term. Now, if I buy it at this price. I sell this right here. I collect this little premium. Stock goes up. Somebody takes it away from me. I don't care because I bought this. I sold this. I collect this. It means I add that to that, and I'm walking away with 1521. If I buy it at 113.56, I sell it at 13. It looks like I'm losing money. So I'm actually, this trade here, I'm actually buying it for this price, selling it for less than I paid for it, and still walking away with a profit. That boggles my mind. That's a lot of people say, well, that's cool. Why wouldn't I do that? I just got your permission, so I'm going to look at the MACD. You can unpermiss me. Don't worry about it. It's not a bad. It's not a big thing. It's not a bad thing. It is what it is. The MACD will do what the MACD is intended to do. Okay, it's the same thing with the Fibonacci retracement. It's doing what it is supposed to and what it was designed to do, but it's not designed for a 4 or 5 day trade. It's designed for long term, a year, 5 years, 10 years, 15, 20, a decade. That's what the MACD is designed for. Same thing with the RSI. People to buy, hold, and just hold and hold. No, that's not what I'm looking for. I'm looking for cash flow. Down, up, I'm making my money. I'm perfectly okay. That's what I'm looking for. Simplicity. Remember, it was created for a 9-year-old. Joey, what's going on? Hey, John. Welcome back to Pinellas. Yes, absolutely. Back in Pinellas, where it's nice and warm and cozy. You know what I like? Okay. Now, I grew up in New England, okay, in a seaside community. I didn't live near the sea. I lived in the poor section of town, because you have the rich people living on the water, and you have the other rich people living on the golf course, and then you had the poor people living on the wrong side of the tracks. Well, I wasn't on the wrong side of the tracks. I was on the other side of the wrong side of the tracks. So, yes, I was dirt poor growing up. I don't know where I was going with that conversation, but it is what it is. Where was I going with that conversation? Where I am at this point in my life. Okay, I'm 62, I'm retired. I've worked 5 decades. My first job was in 1974. I'm retired, so all the money I've collected over my lifetime has given me, just a little bit over 6 digits. Okay, that 1% every single week pays all my bills. Now, I was supposed to start collecting Social Security in January. We are in May, and I have not got a single Social Security check yet. None. I have no idea. So there are a lot of things you can do. There's the MACD. You know what? Let's pull some up. All right. These are all the studies you can do. This is just some of them, not all of them. We got the alpha studies, bearish only candlestick patterns, bearish and bullish candlestick patterns, bullish only candlestick patterns, crossovers, cycle studies, daily studies, David Elliott studies, John F. Eller's studies, John Pearson indicators, LBR studies, license studies, lower subsidy studies, market strength studies, momentum studies, moving averages, portfolio studies, profiles, simple traders studies, source guides, stocks, commodities, bank, all of these things right here. And that's not even all of them. That's just some of them. Let's take a look at a little bit more. Hold on. No, that ain't it. Where was it? Where? Tools, education. Menu, wow, insights and education. So, oh yeah, I'm not going to go into that. Tools, I'm not going to go into that either. Charts, market watch. No, I'm just not going to do it. There are so many studies and so many things you could. I didn't even look for the RSI. Where the hell is the RSI? Oh, here we go. There's the ADX breakout filters. the ADX crossovers, the AM detectors, the ATR studies breakouts, and it's alphabetized. Look, you got the Bollinger Bands, the CCI average, the CPMO, Calkins volatility, corrections indicated. And this is just alphabetized. The DMI, the DMA, the DEMA, the DMI oscillators. There's so much studies that you can put in there. RSI's in there. The MACD is in there. Where is the MACD? MACD right there. Then you have the MACD histogram, MACD histogram crossover, MACD two lines. There's so much crap in here. So much that I could bog myself down just trying to read it. I want simplicity. I want to get in. I want to get out. Oh my God, I've only got 29. I'm going to reboot. Okay, so hold on, guys. I'm going to reboot on TikTok. So once it goes out, just come on back again. 30. That's crazy. We had 200 or 300 last night. Okay, 1, 2, 3. It's going to be up again in a second. Okay, I'll mirror my screen. All right, and come on. There we go. Okay. All right, what else do we have? Now let's go over here, take some questions over here. Thoughts on Nike. Okay, Mr. Joey wants to take a look at Nike. NKE, here we go, yo. Nike, the high, the low. Let's go this way. Where was it a year ago? Where are we right now? Look at this. Shoots up, comes down, goes sideways, drops like a rock, back up, back down. Here we go. Let's zoom in. Zoom in and see what we think. Daniel, what's happening? What's up? Okay. 30 days ago. Here you go. Nike, 30 days ago. The high, the low. Where was it? Where is it? Look at this. Up, down, up. So it's turning right here. I like 2 days to the upside. We only have one at the moment. I want 2 more. So I want to see what happens on Thursday. And then maybe on Friday would be the 3rd day to the upside. Then I would jump in. I don't want to jump in before it starts going back up again. But here it is right there. 30-day high. She drops. Here's the bottom. Now she's going back up. So 2 days to the upside. On the 3rd day, I'll jump in. So let's take a look. What does Nike look like? All right. Here we go. Covered call. All right, we're going to look at the 44. The 44 is right here. One contract at 44. And the numbers look something like this. Are you ready? By one covered call Nike, NKE, 15 May 26, which is next Friday, the $44 call option. The current price right now is $43.88. Well, 44 is not that far away. Profit, $96. The investment, $4,300. What kind of rate of return is that? To find that out, we take a look at the rate of return by grabbing the calculator. The profit, right here, max profit, $96. We divide it by the cost of the trade, including commissions and fees, and that is $4,300. $4,300 gives me a rate of return of 2.2% if you like Nike. It's always going to come back to that last one. Do I like Nike? Well, 2.2% for 1 week, I'll do it. $2.2% for 1 week. Why not? Let's see. There it is right there. Here we go. There is Nike. One covered call. NKE, that's Nike. 15 May 26. That means the option expires next Friday. So I get, what, 9 days, 10 days for this one? The $44 call option, look at this. $43.92. That's 8 cents away. What's the big deal? All right, $96. 43 is the investment. It was a, what was it? 2.2%. All right. We need one more. That's 4. We need one more. 2.2. 5 a night. What do we got? We've got 45 minutes to find one more. John, what's happening, John? Ted, Nick, Jojo, Brian, Michael, not Scott, Filthy McNasty. Interesting name. All right. Joey, thanks. All right, you're welcome there, Mr. Joey. Happy Wednesday, Mr. Daniel. Sean, Perry, what's going on, you guys? So what else do we have? Here we have Yankee. What's happening, Yankee? All right, so over here, what do we have? All right, let's come over to this side. Watching from San Diego, Paul, what's going on? Alex, secrets to trading. Ooh, gotta like that one. Mendy, it's going wonderful. Wrangler, okay, Wrangler wants to take a look at Wells Fargo, WFC. Now, Wells Fargo has been in business for over 100 years, so I don't know what you guys are saying. All right, here we go. The high, the low, where was it? Where is it? Look at this. Up, down, up, down. What's going on right here? See, I want to find out what's going on there to see what's going on. Last 30 days. Here we go. Righty. The high, the low, where was it? Where is it? Look at this. Up, down, up, down, up. Okay. Is it going up? I would like some more support. Now, today, it gapped up. Let's zoom in a little bit closer so you get a better view. That didn't work out right. Okay, take a look. Yesterday was the bottom. What happens on the bottom? Well, it goes back up again. Well, today she gapped up and then she closed lower. That's why I like 2 days to the upside. On the third day, I'll jump in. So I'm not 100% happy with this. All right, Sean, how you doing? Jarina, okay. Marco, Eric, Breck, Stick. Okay, gold, what's happening? Alex, how you going? Just for you, thank you. Peter, Blundergut. How are you, sir? I am wonderful, thank you. Did you take a look at Hertz already? Well, let's take a look at Hertz. Now, the only reason we're not going to do Wells Fargo, because Wells Fargo bottomed out yesterday, and today was a down day. It gapped up. You know, she closed yesterday at 79. She gapped up today at 80. Now she pulled back a little bit. So I might look at it tomorrow on Monday. You know what? Let's put it down for Monday. Wells Fargo. And we'll see what it looks like for next week. Okay? So Alex wants to take a look at Hertz. HTZ. Interesting. What do you think, Alex? Interesting. Let's go over this side. Okay. We got our high. We got our low. Where was it a year ago? Where is it now? It's almost in the same spot. Last year, this year. Look at that. But up, down, up, down, up, down, up. Okay, what's going on right there? I want a closer look. See, hey, Lucky, how's it going there, Lucky? Nice to see you. Whoops. No. There we go. All right, last 30 days. What's going on? There we go. Now, that doesn't look that bad if you think about it. The high, the low, where was it? Where is it? Look at this. Up, down, up, down, up. Okay, the bottom's here, and she's going up. All right. A little gap up here that filled. Now she's going back up again. 648, which means I'd be looking at the 650s, and the 650s are going for 49. That's over 6%. Do you like Hertz? That's the question. Let's take a look at Hertz at 650. Why not? Hertz, 650. 650, there it is. One contract. Here we go. One covered call, Hertz. 15 May 26. That means the option's going to expire next Friday. The 650 call option. $55 is the profit. $595. That's like less than $600 to do one contract. You take a look at your account, you say, how much do I have? How much can I do? Daily 5-7 signals, don't miss out. Oh, damn it, I don't like it when you do those kind of things. I don't. All right, what do we have? All right, sorry. Here we go. Yep, we're looking at Hertz right now. Okay, Income, how you doing? O'Sullivan, Falcon cleaning. People clean Falcons. I had a 64 Falcon. Does that count? Lucky, still, you will wait for Monday if Hertz looks good or buy tomorrow. Now, Lucky, most of my money, like 98, 99% of my money is always tied up. Because the way I look at it, okay, I'm an adult. It sounds kind of strange because I don't act like one all the time. Besides the point. As an adult, I know when my mortgage is due. I know when my electric is due. I know when my water is due. I know when my bills are due. So why would I leave money just sitting around collecting dust? I don't. It's all invested at all times. And I do weekly options for the specific reason. On Monday morning, I sell all my options. So on Monday morning, I get 1% or more of what my account would be. So if my account is $100,000, every Monday I will get $1,000. So when I know my mortgage is due, I make sure there's enough money to pay my mortgage. When my electric bill is due, I make sure there's enough money to pay my bills. Other than that, my money is working at all times. Now, yes, I have a few $100s here and there, just, for minor miscellaneous stuff. For the most part, 98 to 99% of my money is working at all times. And I even have margin money, which is borrowed money. And I have no problem with borrowed money. As a matter of fact, I will borrow money all the way up to 20%. Now I'm okay with that. But for the most part, yeah, all my money is invested. There's no reason for me to have money just sitting around. Mostly everything I have is paid for. My cars are paid for. My boats are paid for. All my toys are paid for. The only thing that's not paid for is the house. Because I'm a firm believer in mortgaging the house to the hilt. Now, there's a video that some guy did many, many years ago. It shows you the benefits of having your house mortgaged to the hilt. But never, ever, ever do that unless you know where the money is going. So if you borrow money against your property, make sure you're making enough money off of that borrowed money to pay those bills and have some left over. So if I borrow money at 20%, fine, wonderful, I'm paying 20%. I even borrow money off my credit cards and I'm paying 30%. Doesn't make me happy, but here's the thing. If I'm making 50% or more every single year, I don't mind borrowing the money. So yeah, my credit cards are staggered. So I'll max them out and then I'll use that money to trade with. It sounds reckless, but I've been doing this for over 30 years, so I'm pretty good at what I do. I don't suggest you do it. Okay, so some of my credit cards are 22, 23. I even have one that's 32%. Granted, I don't like it, but I use other people's money because I make more than I need. Okay, anyway, where were we? Oh, so one covered call Hertz. 15 May, that's next Friday, the $6.50 call option. The stock price is $6.48. And I'm selling it at $6.50. All right, so I make 2 cents off of the stock, but I make 55 off of the option, and I own the stock. But 100 shares is only $5.95, $600. Okay, fine. Calculator, if you will, profit 55 divided by the cost of the trade, including commissions and fees, $5.95, just around $600. What is it going to give me for 1 week? $5.95 gives me, you shitting me? 9%? Holy shit. I'm going to check those numbers again. Sit tight. All right, let's get out of this for a second. Let's do it all over again because those numbers, 9% for 1 week, that's crazy. All right, Let's go all the way back to the beginning just to be on the safe side. Because I prefer to be safe than sorry. Okay, let's take a look at this. Lucky, you ready? Check this out. Okay, so the high of the year, 850. That was back in June of last year. The bottom of the year, 350. That was in March of this year, a couple of months ago. All right, a year ago, we're at $6. Now we're at 650. So what's the motion? Okay, up, down, up, down, up, down, up, down, up, down. Now she's going up. Okay, here's the top, here's the bottom. Now she's going up. That makes sense. Okay, well, let's double check the numbers again. Uh-oh. Checking the numbers again. Here we go. All right, so 648. I want to do the 650s. Let's do the 650s. Okay, let's get this out of the way. Covered call, 650. There it is. One contract. Here it is. One covered call. Hertz, 15 May. Next week, the 650 call option, 55. The same numbers. Okay. Clear that. Down. Okay. Profit, $55 divided by the investment, $595, comes to a grand total of 9%. I was right. That's freaking crazy. 9%. Okay. Hold that thought. Honey, Hertz, tomorrow, 9%. Yes, I'm going to write that sucker down. And no, it is not a recommendation. It's not a recommendation. It's not a tip. It's nothing more than an observation. Someone want me to take a look at it? I put it all in. This is what the number comes out to. You need to do your own research. You need to decide, is this a company for me? It's a yes or no question. I don't give tips. I don't give advice. I take a look at what you want me to look at, and then I just read you what the numbers are. That's it. You need to decide. Okay? I don't like it when people say, hey, James, thanks for the tip. No, it's not a tip. It's an observation. You tell me what you want to look at? Fine, I'll look at it. What does it look like? Okay, got to prove I'm human. Bowl of Fruit Loops. All right, that works. Next. Oh, let's save this one. Of course I'm going to save this one. Why not? Down we go. Where it stops, nobody knows. So we got 1, we got 2, we got 3, we got 4, and come on. Number 5. Here we go, Hertz. Here we go. Hertz. One covered call, Hertz. 15 May, that's for next Friday. The $6.50 call option. Look at this, $6.45 is the current price. 55 is the profit, 595 is the investment. Because remember, any rate of return, any investment, you have to put some money up in order to get a return for your efforts. This one, if and only if you like Hertz.
7.7% for Friday, this Friday, the 8th.
7 point, really? For this Friday? We're going to check that one out. 1 second.
Yeah.
All right, so we got somebody on our live show saying that it has a 7% for 1 week. All right, well, let's take a look at it. Hold on. Out of there. So let's change this just a little bit. Right here, you hit edit, and we're going to change it from next Friday to this Friday, 2 days away. So let's check it out. Hit edit. There we go. Now, right here, here's where your expiration goes. So I'm going to click on that, get rid of 15 May, and I'm going to go for 8 May, which is this coming Friday. All right, there it is, the exact same thing. One contract, there we go. And here it is. All right. It looks the same, and it's going to sound just a tiny bit different. You ready? One covered call, Hertz, 8 May, which is this Friday, 2 days away. The 650 call option, $47 is the profit, and 603 is the investment. So let's get their calculator out again. Here we go. 47 is the profit. We're going to divide it by 603 because 603 is the cost of the trade, including commissions and fees. Now, you got to understand that this is only one strategy that I'm giving to you for free. There are so many other strategies that you can implement or add to it once you are ready. And I have to say that again. You can add lots more other trading strategies once you are ready. I tell everybody who actually, joins me and part of my group, which we do have that, never do something until you understand the basics. Now, the basics is buying and selling. That's about as basic as you can get. But like I said earlier, when you buy a stock, you actually have to sit around and wait and wait and wait for the stock to actually move. All right, so it's 7.79. 7.7. Yeah, let's save this one too. Why not? Come on. Come on, come on, come on. Now touch me, baby. Can't you see that I am not afraid? All right, there it is right there. Again, one covered call Hertz. 8 May, which is this coming Friday, only 2 days away. The 650 call option, same call option. The profit $47, the investment $603 for a 7.8%. Okay. 7.8. Okay. That works. Now that we got our 5, that's 5. Let's do questions and answers now. What kind of questions do you have? What do you got? 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 All right, hold on. Just getting back to normal. Here we go. All right, so we just did Hertz. Thank you, Eric. What's my favorite individual stock over the next 10 years? Okay, Zamar, you're definitely not on the same page that I am. Okay, Zamar, I'm looking to trade on a weekly basis. I don't look at anything for years down the line. Nothing. Okay? There's a lot of stocks I look at, but I don't base it on what it's going to do in the future. I want cash flow now. It's your money. You spend it now. That kind of thing. I'm looking for cash flow. I'm not looking to build my portfolio to grow and grow and grow and grow. That's not what I'm looking for. I appreciate the input though, and it's a good question. But I don't invest that way. I buy, I sell, I buy, I sell. But I only buy and sell good quality companies. And those are dividend kings, dividend aristocrats, dividend champions, dividend contenders, and anything on Warren Buffett's list. If it's good enough for old Warren, I'll buy it. All right. But the other ones, I want at least 20 years of increased profits. Is the company profitable? And are they consistently profitable? That's one thing. Are they profitable? But are they consistently profitable? That means year after year after year after year, more money, more money, more money.
Hey, James.
Yes.
And I know you were talking about that MACD and the Fibonacci and all that stuff, and you don't really pay attention to that. Try to keep it simple. But what about earnings? So, for example, Hertz has earnings tomorrow. Maybe that's why those premiums are so high. It's kind of scary for some people. What are your thoughts on that?
My thoughts on that, if you don't like the company, don't buy it. It's actually that simple. You ever notice that adults have a tendency to make things more complicated than it needs to be? Either the stock is going up, the high of the year is right there. Either the stock is going down, the bottom of the year is right there. Where are they going? Up, down, up, down. Now it's going up. It's either going up or it's going down. And you're absolutely 100% correct. The reason why the premiums are so high is because the earnings are on Friday, which is 2 days away. So, yeah, I've seen earnings that are positive and the stocks drop. I've also seen earnings that are negative and the stocks go up. So to me, earnings really aren't that important unless, like I say, unless the stock has a consistently create a black swan because of the information. The reason I say that, let's take a look at Target for a second, because Target is notorious for black swans. And there aren't any here. Oh, there's one right there. Okay. It's not that huge, but it is still one. Okay. 106 and it drops to 94. Okay. That's black swan. An event that creates a huge jump or a huge drop with, very minimal or, lack of solid information. Now, I got stuck with Target 4 or 5 years ago. Okay. I bought it at 135 and it dropped all the way down to 102. That was a big drop, but I don't sell at a loss. Even though the stock dropped, I don't sell a loss. But at 102, I was selling the 107s and the 109s, 4 or 5 strikes out, but I normally do. And then the black swan showed up, and that baby jumped $35 in one day, gapped up $35. So look for companies that do that, and Target is one that's notorious for it. Hertz, not so much. But again, rule 1, never buy something you don't want to own. Number 2, never sell at a loss. So if I do buy, well, I am going to buy some tomorrow, only because the numbers are crazy. And I don't mind Hertz. I mean, I've had plenty of Hertz over and over and over again. They're not going out of business anytime soon. I haven't heard any bad news about Hertz. There's no, Hertz is on the brink of bankruptcy. No, I haven't heard that. Or
so basically, it's not an indicator for you.
No, not at all. I either like.
Perfect. Thank you.
But that's for me. You can't go by what's right for me. You have to go by what's right for
Well,
you.
I gotta go by what's right for you.
You do know this is recording, so if I ever get in trouble, some lawyer calls me. You said it. No. Here's the recording. It's not a tip. Figure it out yourself. I like it because I like Hertz. Yeah, I've had a whole bunch of Hertz last. I think I had like 17,000 shares about 4 or 5 months ago, and then she jumped up, and they took it away from me. Fine, I profited on it. That's my intention. My intention is not to hold something forever. My intention is to buy it, make a profit, get rid of it. That's my intention. All right, so let's keep on going. What we got? Isaac, can we look at Kimberly-Clark? I love Kimberly-Clark. Kimberly-Clark has 5 decades of increased profits. They're dividend king. Oh, love Kimberly-Clark. KMB. Here you go. Maybe. Let's go take a look. Why not? Now, I'm not going to dive really deep into it because we already found our 5 for the night, but here you go. 145 is the top. 94 is the bottom. She goes up. She goes down. She goes up. She goes down. What's going on right there? Well, let's zoom in a little bit because the last 30 days gives me a good idea of what's happening next. Well, you get your high here. You get your low here. Okay, she went up, down, blah, blah, blah. But now we're here. We got the high here and we're here. No, not enough room. That is not enough room to play around for 5 days. Don't get me wrong. I love Kimberly-Clark. I do. But look at where we are. That's not a lot of space. That's only $2 worth. 1% is $1. Yeah, you could get it, but then you're looking to break through to a new high. Well, it's easier to go someplace you've already been, but if you're trying to go someplace you haven't been, it's not as easy. Now, don't get me wrong. I love Kimberly-Clark. I do. But it's your decision. Do you like it enough to jump into it? NSX Garage. How you doing today? Yep, Hertz. Marvin wants to take a look at Visa. Visa, Las Vegas. That's going to be a no. Marvin, you see that is a big fat no. And there's a reason why it's a no, Marvin. Now, it's not a no as in no, I will never buy it. It's a no, the numbers don't look good today. Let me show you specifically. The high is 375. The bottom, 295. That's a big drop. Okay? She went up, then she dropped. Here's the bottom here. Now she's bouncing up. But no, she's not. Let's zoom in. Because see, the 1-year chart will give you a rough idea what's going on. Let's open it up a little bit more so you get a better view. Okay? Now, when I look at a chart, it takes me 2 to 4 seconds to say yes or no. because I know what I'm looking for. And it's not that difficult, and you can see it within 2 to 4 seconds. Are you ready? The high, right there. It sticks out like a sore thumb. The low, right there. It sticks out like a sore thumb. Okay? Where was it? Right there. Obvious. Where is it? Right here. Obvious. But when you're looking over here, you notice this. Okay? What is the motion? All right. Up, down, up, down, up, down. Let's zoom into that and get a clearer view of what I'm talking about. Okay, last 30 days. Same thing. High, low, where was it? Where is it? Up, down, big jump up, down. So it's got down. It's going to fill this gap, so it's got all that room to keep coming down before she turns around. More than likely. It's not guaranteed, but it's more than likely. Now, don't get me wrong. I like the company, just not this week. So what I'm going to do with Visa is I'm going to give it another week. So not next week, but 2 weeks from today. Okay, so not next week. 2 weeks, Visa. We'll take a look at it again in 2 weeks. Postel, how you doing? How are you today? Don't know if I pronounced that right. All right, what else do we got? We already looked at Kimberly Clark. What do we have over here? Yep. Earnings. All right, Hertz. Wait a minute, are earnings tomorrow for Hertz or are they Friday? Let's find out. Market Watch. HTZ. They are tomorrow, but are they before the market opens or after the market opens? Earnings tomorrow. 9 a.m. Damn it. That means the opportunity to get that 6, 7, 8% or the 9% for Hertz is not going to be an easy feat because the earnings are coming out at 9 a.m. That means the market maker is going to have 30 minutes to decide what he wants to do. So it looks like we missed the boat on that one. We'll see. We'll see what it opens up at. AEHR. What the hell is that? AEHR. All right, AEHR. It's never a good sign when I say, what the hell is that? AEHR. Air Test Systems. Interesting. I'm going to say no, only because the chart just doesn't look right. Let me explain briefly so you understand. Okay. Apparently, this stock was very comfortable being below 40 for almost the whole year. But then all of a sudden, look at the volume. The volume, see, here's the average volume right here. And this is up here. That's a huge spread in the volume. Huge. And it shot up, pulled back, now it's going back up again. But it averaged out here right until this scenario. Now, before I would jump into a company I've never heard of, because I like companies such as Home Depot, Lowe's, Ford, General Motors, IBM, General Electric, AT&T, Verizon, Visa, MasterCard, household names. This is not a household name. Ear Test Systems, never heard of it. Before I invest in anything, well, you know what? We got time. Let's check this out. You ready? Let's go to Yahoo Finance. Put in, what is it? AEHR, okay? AEHR. Okay, we're going to put it into Yahoo Finance to get some more information on it. Here it is right here, Air Test Systems, $96. There are no dividends. That's why I've never heard of it. Because I invest in companies that are consistently profitable. And consistently profitable means they're increasing their profit. Wait a minute. It might be under summary. Let's take earnings per share. What do the earnings per share look like? Here you go, right there. Negative 0.38 earnings per share. No. Number one, never heard of it. Number two, no dividends. Number three, negative earnings. No, no, and no. Sorry. Now, NSX Garage, you might like the company. It may be great. Why did it jump up so much? But better question than that, why did they have negative earnings? So, no. Zimar, what's my favorite angel stock for the next 10 years? Okay, like I said, I don't do long term. Long term for me is 30 days. Okay, you can take a look at my schedule. I have a rough idea of what I'm doing this week. No clue what I'm doing next. See, being retired is a total different thing. No idea whatsoever. Alex, I got another one, James. Coles. Ooh, I like Coles. I do. All right, let's get out of this. Coles, KSS. Let's take a quick gander. The high of the year, 25. The low of the year, 6. Goes from 6 to 25 to 12 to 16 to 14. Think about that for a second. Hold on. Think about that for a second. A year ago, $6. $6 to 25. Okay. 6 to 12 is 100%. 12 to 18 is 200%. 18 to 24 is 300%. 24 to 25, okay, so that's 302 or 3%. Over 300% increase in 1 year. Okay, then went from 25 down to 12. That's a 50% decrease. Check it out. 300% drops 50%. Now from 12 to 16, that's $4. That's 25%. 300%, 50%, 25%. $2 drop, $2. That's 10. 15%. 300, 50, 25, 12. Weird numbers, right? 300%, 50%, 25%, 12%. Let's go in a little bit deeper. Last 30 days. All right. The high, the low. Where was it? Where is it? Look at this. Up, down, up. Here's the bottom right here. The new bottom. 1, 2, 3, 4, 5. 5 days up. The 1441, the 1450s are going for 54 cents per share. That's over 3%. If you like Coles. That's it. Do you like Coles or do you not like Coles? Let's quickly do the numbers here. I'm not going to do the whole thing because we already got our 5, but let me just quickly check. Okay, current price, $14.41. The 1450s are going for 54. So we're going to take 54 divided by the stock price because this is the premium per share. Okay, just for the right to buy it, someone's going to pay me 54 cents per share on a $14 stock. Okay, it's right, $14.41. And that comes to a grand total of 3.7 for 1 week. 3.7. I have Coles. I mean, I think I've had Coles for the last 4 years. Not that I bought it and hold long term. I buy, sell, buy, sell, buy, sell. Why? Because it gives me 1 to 3% every single week. So why would I get rid of it? And better than that, well, worse than that, check this out. Okay? Up, down, 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 up. That's all it does. That's it. Knowing where it's going next is awesome. Take a look. It's going up. Okay, see right here? 12.25. Right there. Well, let me go over this side so you can really see. 12.25 jumps up to $16.25. That's a $4 increase. $4 increase on a $12 stock is 25%. Well, yeah, there is going to be profit taking right there. Profit taking, retracement, pullback, whatever you want to call it, correction. Okay, now we're at 14 and we jumped up to 15. It's going up. See, higher, 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 higher. Blah, 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 blah. I want 2 days to the upside, and on the third day I'd jump in, but I already own Kohl's. I've owned Kohl's for the last 3 years. I buy it, get a profit, sell it. Buy it, get a profit, sell it. Buy it, get a profit. It does it every single week, so why would I get rid of it? Okay, who came up with Kohl's? Alex! Nice pick there, Alex. Earnings is tomorrow. Earnings is tomorrow before the market opens. Uh-oh. What the hell just happened? Nope. I want that one. Ha 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 ha! Everything just disappeared. Damn it. All right. That's weird. What did I do? There we go. I hit the wire. Anyway, so we only got 10 minutes left. So what are the questions we have for the last 10 minutes? Let's do this. To get into Visa stock, how many candles you see green before jumping in? 3. All right, we did Kimberly Clark. Isaac, I know you focus on trading, not long term, but do you think 6% yield is sustainable? Example, Pfizer, Altria, and UPS. Now, Isaac, the way I look at it, okay, how many years consistently have, you know what? Let's go and check them out. Let's go check them out. Why not? Okay. So, historical data, okay. Now, I want to take a look at the dividends only, because the dividends are the portion of the profit the corporation gives us. Okay? So first one, Pfizer, PFE. PFE. All right, now let's take a look. If we're going forward, everything's going to go higher and higher, but if we're going backwards, the numbers get lower and lower. So how far back can we go? 2006, that's 20 years. Okay, here we go. 2006, very first dividend was February 8th, 2.27, 2.27, 2.7, 3. Uh-oh, it decreased it 50%. Back in 2008, 2009, went from 30 cents a share to 15 cents a share. That's a 50% reduction in the dividend. That's not good, Isaac. Let's keep on going. 2009, we're at 15. Okay, 2010, 17, 2011, 18, 2009, 15, 17, 18, 20, 22, 24, 26, 28, back to 30, 32, 34, 36, 39, 40, 41, 42, 43. Okay, so they have consistently increased, but in 2002, 2008, 2008, 2009, they decreased the dividends by 50%. But from 2009 to today, they have increased every single year. Now, that was Pfizer. Let's take a look at Altria. Altria is MO all the way back to 2006. Here it is right here. 2006, March 13th is the first dividend. 80, 86, 69. That's not good. 75, 29, 32, 34, 35, 38, 41, 48, 52. 56, 61, 70, 80, 84, 86, 90, 94, 98, 102, 106. Okay, same thing. Not a full 20 years, but still a nice run on the profits. Okay, next one, UPS. UPS. 20 years ago, 2006. February, 38, 42, 45, 47, 52, 57, 62, 67, 73, 78, 83, 91, 96, 101, 102, 152, 162, 163, 164. Still, all three of them have more than 15 years of increased profits. Can it keep doing it? So I can't tell you whether or not it's going to continue doing it. The only thing I can look at is history. Nobody knows what's going to happen, but we do know what already happened. But each three of those companies, Pfizer, Altria, and UPS, have over 15 years consistently increased their profits. And that's what we're looking for. And that's okay with you, fine. All right, what else we got? Earnings tomorrow. All right. Alrighty. Okay, we already looked at AEHR. That's a no. Mamba wants to take a look at COHR. I'm going to tell you the same thing I tell everyone else when I see something I've never seen before. What the hell is that? COHR. COHR. Current Corporation. Well, I'm going to say no, only because it's at the high right now. I don't buy anything at the high. And I've never heard of it. NSX. Yeah, I get it. The premiums on AEHR are huge, but they're running a negative on the profits. So no. Casey? Lance wants to take a look at Casey. CASY. Casey's General Store. No. Two reasons for a no. Ready, Lance? Number one, it's at the high of the year. That's number one. Number two, it's a monthly option. May, June, August, November. I don't do monthly options because the profits just aren't there for me. Ricky, CLSK. CLSK. Okay. Well, number no. No. Why? Oh. Who came up with this one? Was it Ricky? Ricky, check this out. 30 days ago, we're at $8. Now we're at $14. That baby's almost straight up. Why would I want to buy it at the high? It just doesn't make any sense for me. Now, I like no risk. Buying at the high, it doesn't make any sense. I like to buy low and sell high. Not buy high and hope it goes higher. I like consistency. I like predictability. And I don't like risk. And to me, buying at the high is a risk. TP, how you doing? Carlos, ONDS. Ondas. Okay, interesting. Get the high, the low. Where was it? Where is it? Look at this. Up, down, up, down. It's going down at the moment. If you really like it, where is it? All right, there you go. She dropped. Here's the bottom. Shoots up. Here's the 30-day high. Coming back down, looking for a new bottom. So it's dropping at the moment. Okay, 30-day bottom, 30-day high. Got your profit taking down she goes. Where she stops, nobody knows. So if you really like it, wait for the bottom to show up. Well, how does it do that? You find the bottom, 2 days up. On the third day, I would jump in. That's me. That's my rule for me. The bottom, 2 days up, 1, 2. On the third day, if it's higher, I will jump in. So I would have jumped in here, going up to there, get my 1%, and then jump on out. That's it. Truth for Peace, Mushroom Mabel. How are you guys doing? Marvin, John Bahay, PHM. PHM's Pulte Group is like Kohl's, PHM. Okay, interesting. Bottom of the year, top of the year, up, down, up, down, up, down. Not this time. Sorry. Move your camera to the right a little bit. Whoop, wrong right. Here we go. Oh, wait a second. No, all the other ones are off. You gotta remember, it's not just one camera. It's 9 cameras. All right, got that one. Got that one. Got that one. I got that one. What are the 5 for today? Okay. Whirlpool. Whirlpool is WHR. WHR. And that is a monthly. I don't do monthlies. The numbers just don't work in my favor. So if it doesn't work in my favor, it's an automatic no. Univision. How do you predict the prices since you keep saying predictable? No. See, I'm not gonna insult you personally, Univision, but sometimes people hear what they want to hear. When I say predictable, let me show you what I mean by predictable. Okay? It's currently at 26. Let's do 25.50s. There it goes. Right there. Now, when I say predictable, okay? 25,000 is my investment. Cost of the trade, including commissions and fees. Maximum profit, $270. I know what my profit's going to be before I know and before I do it. It's predictable. Now, also, what do I mean by predictable? Okay, Market Watch. Let's take a look at. I'm going to find me a good one. Dividend achievers. Not that list. Right there. Okay. Let's take a look at Aflac. Right there. Aflac. Today is May. Okay. Wait a second. Let me see if I can find a better one. January, February, March, April. Nope, that's not what I wanted to do. All right. April. Give it a second. There we go. Right there. Cardinal Health. CAH. Cardinal Health. The first day of April, which is the first week of the second quarter. So let's go back and take a look at the first week of the first quarter. Okay, first week of the first quarter. CAH. Okay, January 2026. CAH. First week of the first quarter. Okay, first week of the second quarter. April. Second quarter. January, February, March. First quarter. April, May, June. Second quarter. CAH. First week, second quarter. Okay, January, February, March, April, May, June, July. Let's go back to July, because July is first week of the third quarter. CAH. See it? Hold on, not done yet. October. Let's go back to October. CAH. Did you see that? First week, first quarter, CAH. First week, second quarter, CAH. First week, third quarter, CAH. First week, third. They do the same thing over and over. That's what I mean by predictable. They do the same thing week after. And also, hold on. Let's take a look at CAH. Look at the chart. Put in CAH. Okay, you ready? Dividend. Okay, 2 weeks before, it went up. Dividend, 2 weeks before, it went up. Dividend, 2 weeks before, it went up. Dividend, 2 weeks before, it went up. Stocks have a tendency to be predictable just before the dividend date. Here's the dividend. 2 weeks before, it went up. Dividend, 2 weeks before, it went up. 2 weeks before, it went up. 2 weeks before, it went up. I do stocks that do the same things year after year after year, every 90 days, every 13 weeks, every quarter. They do the same things over and over and over again. You're welcome there, Mr. Lance. Ezra, we already looked at Visa today. Oh, it's past 4 o'clock. That means past 11 o'clock. Oh, I'm done. I'm done. Hopefully that made sense. So let's take a look at these last questions. Loops, LP. What the hell is LP, Loops? Get out of that. Get out of that. LP. LP. Leopard Lake Gold. Okay, unfortunately, we cannot find that symbol. That's a no. Sorry. Seth, NNE. What the hell is that? Nanonuclear energy. Interesting. The high, the low, where was it? Where is it? Look at this. Up, down, up. Okay. Let's take a look. Hold on. MDT. Is that Medtronics? MDT. Oh, ouch. Look at Medtronics. Now, Medtronics, you may or you may not like it. It's got 5 decades of increased profits. So the bottom was today. So I'm putting this down for next week. And why am I putting it down for next week? Because you can't get any lower than the low of the year. Well, here's the low right there. But I'm not going to buy it this week because I want it to find the bottom and then turn around. Medtronics has been profitable for over 5 decades. They're just looking for the bottom now. I'm okay with that. Okay. To get into Visa stock, how many green candles? I said 3. Okay. I like to find the bottom, 3 days up, and I'll jump in. I like 2 days up, and on the 3rd day, I'll jump in at the beginning of the day. Okay, we got that one already. SLV, that's silver. Dude, SLV. It's not really going anywhere at the moment, is it? WFC, we looked at that one. All right. Jerry, how you doing? Spend a buck. Back in, thank you. What was that one? Super Trucker, I'm not quite sure. 650 and a Robinhood is 49 profit. Okay. Hertz earnings is also today, 7th May. Actually, Hertz earnings is tomorrow morning. Those call options have great value being only 2 days away. Yeah, they do because the earnings is tomorrow morning. Great night, Cam. Have a great night. Casualty Gale. You can take a look at that tomorrow. User 61825411292201. Let's call you Alfred. Sounds like an Alfred. Okay, QQQI and QQQM are going to be a no, and a hell double no. Sorry, I don't do the Qs because they're just not consistently profitable. Please guide how to get into that calendar. Are you ready? The calendar is relatively easy. Okay, up at the top of Think or Swim, offered through Charles Schwab. Hold on a second. Alrighty. So, is offered through Charles. This is Charles Schwab's. It's called Think or Swim. Okay, you have monitor, trade, analyze, scan, market watch. So if I come over to market watch, see the drop down? Quotes, alerts, visualize, financing rates, calendar, right there. Under the market watch tab, there's the calendar. AMD. Ooh, Jennifer, Moderna. Moderna, mRN, mRNE, is that right? mRN? mRN. No. MRDN. I have no, oh, mRNA. Okay, I was close. I had mRNA. Okay, so here's Moderna. If you like it, here's the top. Here's the bottom. Look at this, goes sideways, jumped up, pulled back, back up, back down. What's going on here? Oh, let's zoom into that if you like Moderna. Uh-oh, I hate when that happens. Okay, check it out, Moderna. It went up, here's the high. What happens when you get to a high? Profit taking. Boom, right down to there. Remember I said 2 days to the upside? Look, here's one, there's two, and here's the third one right there. So yeah, that looks good. 48.79. I'd be looking at the 49s. The 49s for Moderna are going for 197. That's over 4%. If you like Moderna, it's not a suggestion, Jennifer. It's just an observation. Here's the current price. Okay, if I buy it at 48.79, I sell it at 49, I can collect 197. Well, 197 on a $49 stock is over 4%. Oh, Realty, hell no. Will T, oh, Realty is a monthly, that's a no. Will T open? What the hell is open? OPEN. Never a good sign if I have to say, what the hell is this? Do you know what I mean? Oh, hell no. Come on, Will, look at this thing. It was less than $1 last year. Look, less than $1 last year, jumped up to 11. Now we're sitting at 5. If it was less than $1 last year, there's no possible way you can have 20 years of increased profits. That is more of a speculation play. Hey, you have fun with it. I don't do those kind of things. Intel, we looked at it already. HL, never heard of it. What the hell is HL? Helka. What the hell is Helka? Again, never heard of it. HEHL. HL. Helka. Okay. I'm going to say no. Okay. 2011. Check this out. First dividend, 2 cents. Then it got cut to 1.3. Then it was 2.3, 0.03, 0.03, 0.03, 0.03, 0.03, 0.03, 0.06, 1.4, 1. Yeah, hell no. Sorry. Okay, casualty. We already looked at Oracle earlier. Stephen, observation SanDisk is 412% year to date. Okay, have fun with that one. QDTE, nope. Polaris, isn't Polaris another monthly? PII, or yeah, PLL. Polaris, a monthly. Yeah, I don't do monthlies. Sorry, they just don't work in my favor. Bella, let's go. James, what's going on? Z, QDTE. QDTE. Hell no, I don't do monthlies. Monthlies don't work in my favor. All right, so that's all the questions there, all the questions there, all the questions there, all the questions there, all the questions there. What do we have down here? Please guide me to that calendar. I already did that. Do you buy weekly options or sell weekly? I only sell. 80% of all options expire worthless, so I'm not a buyer. I'm a seller. Johnny Ringo, Clorox CLX is a monthly. I don't do monthlies. The numbers just don't go in my favor. So it's a no, 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 and a no, no, no. Sorry, don't do it. MSTR, hell no. Theta, have you looked at the profits for MSTR? Seriously, hold on. MSTR. Okay, MSTR. Oh, look at that. No dividends. So why am I looking at a company that doesn't have any dividends? Hold up. Okay, Theta 1, 2, 3. Okay, MSTR. Earnings, listen closely. Earnings per share. All right, I got to blow this one up. This one's fucking unbelievable. Okay. Theta 1, 2, 3. Hold on. It's coming up right here. Here it is right here. Yeah, big enough, big enough, big enough. Right there. Earnings per share. Earnings. How much money they're making? Earnings per share. Negative 36.99. Negative 36.99. Hell no. Why are you putting your money into a company that's losing? Negative $37. Hell no. Johnny Ringo, I know CoreWeave is a heavens no, but I'm up 78% in 5 weeks. But Johnny, there's a lot of companies that jump up. That's great, wonderful. But does it do it consistently, predictably, week after week after week after week? Let's take a look at CoreWeave. CoreWeave, isn't that CRWV? Is that right? CRWV? What is the ticker symbol? Ooh, I like Tractor Supply. What is CoreWeave? Anybody? Anybody know CoreWeave? Oh, CRW. I was right. CRWV. All right, let's go back here. CRWV. Ouch. Ouch. Johnny Ringo. Whoops. Hold tight, Johnny. You're not going to like this. Sit tight for a second there, Johnny. Come on. You're not going to like this, Johnny. You're not. Sit tight. It's coming. It's coming. There it is right there. Nice and big so you can see it, Johnny. Earnings per share. Negative 281. This company's losing money. Why are you putting your money in a company that's losing? No, 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 and hell no, 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 no. CRWV. CRWV. Okay. I got something for you, Johnny. You ready? Here's the top. Here's the bottom. Here's where it was. Here's where it is. Up, down, up, down, up, down, up, down, up. Okay, right there. Watch this, Johnny. About 5 weeks ago, we're at 60, 65 bucks. We jumped up to 140. The question for you, Johnny, when are you taking profits? Because the thing is, it's not a profit until you take it. We already did Pfizer. No to Pfizer. DRAM. I have no idea what that is. Can we take a look at Ben Franklin? That's a monthly. That's a no. Hormel. Hormel is over 100 years old. They have 5 decades of earnings, but it's a no. The reason why Hormel is a no is because of this right here. Okay, the current price, 21. The 21 is going for 20 cents. Okay, but look at one strikeout, 5 cents and then 0. No, only because the premiums are horrible. Okay, look, at the money, it's 21. At the money, it's 1%. One strike out of the money, it's not even 0.25%. Then we got 0.0000. So as the stock goes down, you're not going to get anything. What's my top 3? I would say Kohl's. I sold half my shares today, gambling the rest on CoreWeave. Dude, it's not a profit till you take it, Johnny. Okay, so we're basically done with everything. I sell buying anything under 25 cents? No. I only do companies that are over 2 decades of consistent profits. That's it. DRAM is a memory company. I have no idea what the hell that is. DRAM. Hell no. I don't do monthly options. No, no, no. Ford. Ford. Isn't Ford going to be all right. No, because at 12.20, I'll be doing the 12s, picking up 28. Okay, that's okay. I'll be picking up. See, if I buy it right now, it's 12.20. I'm losing 20 cents, and the 12s are going for 28, which means I'm only making 8 cents. No. And then the 12.50s are going for a little bit less than, a little bit above half. The numbers just aren't that good this week. No, sorry. Okay, Jax, DRAM is a memory index. It's brand new, consisting of Micron, SanDisk. Okay, I really don't care what it is. I'm sorry. It sounds that way. But it's of no concern to me because it's not consistently profitable. It hasn't been around for 2 decades. And no. Adam, 10,000 at 0.15 on the share. Is that $10,000 or 10,000 shares? And what is the share price? Oh, just letting you know. Okay, thank you. Stefan, you looked at Macy's in the past. Does it work? Yes, I love Macy's. It's one of my favorites. Lisa, all right. You guys, it's past 11. I'm done. I'm here every night, Sunday, Monday, Tuesday, Wednesday, Thursday from 9 p.m. until 11. It's 11:20. I'm past my bedtime. I'm going to turn into a pumpkin. You know what that means? For those of you that are here before, you know what that means. Here it comes. Here it comes.
You dream in stars, diving too deep, fixing the world while the rest of us sleep. Your heart set on giving.
Bye, everyone. That's it.
No matter the strain, building your legacy through love and
Cool beans.
rain. Julie knows